Hello, very good morning to all, and welcome to today's Daily Dose of Market Insights. Very interestingly, the US stock market rallied yesterday, but led by the laggards, the Dow Jones Industrial Average and the Russell 2000. The Nasdaq 100 underperformed due to fears of AI bubble, dragged down by a drastic decline in Oracle share price yesterday. And over in the FX market, the US dollar continues to remain soft, and the US dollar index declined to a 2-month low. Very good morning to all. I'm Kelvin here. Welcome back to today's Daily Dose of Market Insights. Today will be Friday, the 12th of December 2025. So before we start our gist of the Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and it's not investment advice. Past information is not representative of future results. All right, so for today, it will be a very special Daily Dose because I will also conduct, give me a minute, hopefully the screen is good. Yeah, yes. So today will be a special Daily Dose session where I will conduct a special draw for our OANDA Asia Pacific Welcome Bonus Draw, where we will draw up 5 lucky winners that stands a chance to win 888 Singapore dollars that would be credited in your respective trading account. So do stay till the end of the Daily Dose where I'll be drawing live these 5 lucky winners over here. All right. So let's get started for our Daily Dose. So as usual, before we jump straight into that intraday technical outlook on all the broad-based cross asset classes that we cover on a daily basis, which i.e. the major US dollar pair, the major stock indices, including the US stock indices, and as well as the 2 key commodities market, which is gold XAU/USD and West Texas crude oil. Let's have a recap what has taken shape yesterday in terms of the intraday performance and as well as the relevant economic data/events that drive this intraday performance. So let's start with the state of the US stock market first over here. So without further ado, let me share with you my screen. All right. So as you could see on my screen here, great. All right. So what you could see over here is that this is the intraday performance of the major US stock indices, starting from the S&P, the Nasdaq, the Dow, and the Russell 2000. So what you could see over here is that the S&P 500 hit a brand new closing high at 6,901 over here yesterday, but that hasn't broke above the fresh all-time high yet, the intraday high. So what do I mean by this? So if you go to the chart of the S&P 500 over here, very quickly. Right, so this is the S&P 500. Right, so yesterday is up by 0.21% and closed at 6,902. So it has a daily fresh all-time closing high, right? But however, if you go to the candlestick, this is the candlestick pattern. So if you go to the line chart, it indeed broke above the previous previous all-time closing high at 6,890. That was on the 29th of October. But if you do it on a candlestick chart approach over here, it didn't actually break that intraday high that was printed on the 29th of October. So that's actually 6,920. But overall, the performance from a technical perspective still remains bullishly constructive. So that later I'll touch on the intraday technical outlook on the S&P 500. All right. So, but basically, very constructive in terms of the price performance of the S&P 500 yesterday. And the laggards, which I mentioned earlier in my 2 daily doses prior to this, is the Dow Jones Industrial Average, managed to up 1.34%, followed by the Russell 2000, which comprises the small cap company, up 1.21%. And these 2 laggards, the Dow Jones and the Russell 2000, managed to scale fresh all-time intraday high yesterday. So if you look at the chart of the Dow Jones Industrial Average, right, so very clearly it broke above the previous all-time high, intraday high at 48,431 that was printed on 12th of November. Yesterday, clearly having a bullish Marabuzu candlestick with a close at 48,704. All right, same for the small cap Russell 2000 as well. Managed to surpass the previous all-time high at 2,542 over here that was printed on 15th of October, and it has 2 consecutive all-time high that's been made on the Russell 2000. Firstly, on the Wednesday, there is ex-post FOMC meeting, and followed by yesterday, Thursday, which rallied by 1.21% and closed at 2,590. So the reason why the Russell 2000 and the industrial, the Dow Jones Industrial perform, let me touch on the Russell 2000 first, because yesterday I shared with you guys that the FOMC meeting, the US Federal Reserve latest dot plot, and as well as during the Fed Chair press conference, they painted a Goldilocks scenario, and with Fed Chair downplaying the possibility of the next move to be an interest rate hike, and potentially we could continue to see a dovish Fed heading towards into the next year in 2026. So why do I say that? But if you look at the US Treasury yield over here, let me share you guys. Give me a minute for the screen to, yeah. So this is the US Treasury yield. So the US Treasury yield, the 10-year yield continues to remain below 4.2% over here. And even the 2-year Treasury yield that is much more sensitive to US Federal Reserve monetary policy managed to dip down below the 50-day moving average, now trading at 3.5%. So with a lower interest rate environment potentially heading into 2026, that could potentially benefit the Russell 2000 index that comprises the small cap company. Why? Because this small cap company has much more highly leveraged balance sheet as compared to those bigger cap stocks that are inside the NASDAQ 100 and the S&P 500. So they tend to benefit. All right. So that actually explains their outperformance in the last 2 days. Now over to the NASDAQ 100, where managed to close negative, but it still managed to rally from this intraday low of 25,372. So at the start of the US session yesterday, it plummeted, but thereafter it managed to close near the high. But overall, it's still a negative print in terms of daily performance, down negative 0.35%. And the culprit was more precisely related to this AI bubble fails again. So bear in mind that NASDAQ 100 has a higher weightage of how this NASDAQ 100 is being weighted, is being heavily skewed weighted to AI mega cap names like NVIDIA, Oracle is one of them. And also, if you look at the performance of the S&P heat map yesterday, very clearly, we see deeply in the rate of the semiconductor industry, where NVIDIA is down by negative 1.55%, followed by Broadcom down by negative 1.6%, and also Oracle down by a whopping negative 10%. And the reason why Oracle fell that much was due to the fact that in its so-called earnings outlook, or the revenue outlook, is that the company mentioned or highlighted that it's spending on AI data centers and other equipment, plus rising outlays that are taking longer to translate into cloud revenue or translate into real revenue that what investors demanded over here. So capital expenditure, a metrics of data center spending by Oracle, were about 12 billion in the quarter, and increased from 8.5 billion in the preceding period, the company said on Wednesday after the close of the US session. So that actually a kind of a rising a bit of fears to the market, stating that potentially Oracle very high spending, especially pertaining to that circular AI financing that is taking shape among Silicon Valley right now, where Oracle pledged to invest in billion-dollar deal to OpenAI, and OpenAI will use this so-called billion-dollar indirect sales proceed from Oracle to invest more into NVIDIA cutting-edge Blackwell chips. So it's kind of like a circular AI financing. And given the fact that this huge capital expenditure by Oracle hasn't really translated into real cash inflow revenue stream, so that kind of freak out investors yesterday, that sent Oracle share plunging to a 11-month, the worst performance in the last 11 months, by plunging down to a negative 10% yesterday, and created a negative feedback loop into the semiconductor subset of the technology sector, right? That causes NVIDIA price to be down by negative 1.55%, and NVIDIA has a significant weightage on the NASDAQ 100, much more higher as compared to the S&P 500. So that actually explained to us the underperformance of NASDAQ yesterday. But later I'll share you guys over here is that in my intraday technical outlook, despite that negative fall of negative 0.35%, the short-term uptrend still remains intact for the Nasdaq 100. Right, over to the FX market over here. So the FX market managed to continue to see the decline on the US dollar based on the 5-day rolling performance basis. As of now, we are speaking. So basically on this chart, what do I do over here is that I use dollar as a base currency. That means $1 equals to how many euro, $1 equals how many sterling. So based on the 5-day rolling performance basis, the dollar continues to be on the softer side. Extreme. Then also after this dotted line here. So this dotted line is on the day of the FOMC meeting. So right after FOMC meeting on Wednesday, US time, early Asia session will be 3 a.m. Singapore time Thursday. The dollar continues to trade on the softer side, and based on the 5-day rolling performance basis, the dollar is the weakest against the Swiss franc, down by negative 1.1%, followed by the Euro, where the dollar is down against the euro by negative 0.7%. And for those who followed my daily dose on Monday, I've been saying that the dollar is trading on the weaker side based on the technical analysis perspective, which so far has started to materialize within our expectation. So back to the US dollar index chart, which I tend to use it as a gauge to actually kind of read the dollar strength or the dollar weakness. So bear in mind that this US dollar index, before I start to look at all the individual dollar pair, I tend to look at the US dollar index to give me a broad sense where the US dollar is leading, because it's something like a barometer to have a view whether overall on the average the dollar is weakening or the dollar is strengthening. So by looking at this US dollar index, very interestingly, like I say, for those who join my daily dose for today for the very first time, from the low of 1st of July this year, it's been trading in the complex sideways range configuration. Upper limit of the sideways range, the range resistance, medium-term resistance, the medium-term range resistance, which is 110, 100, and 100.54 over here. So from hitting close to 100.54 on 20th of November, it started to shape 3 bearish reversal spinning top candlestick. And thereafter, the price action can maintain the upside momentum on the US dollar index and starts to slide down since 25th of November, which is about a month, about 3 weeks ago. So ever since it slid down from 25th of November, and with the close below the 200-day moving average on the 26th of November, price action on the US dollar index continues to inch downwards. And right now is en route towards the middle part of this range, all right, over here. So broken below the support level, yesterday highlighted 98.66, now turns into a pullback resistance at 98.66. On yesterday, US session tested it, can't maintain that momentum and shape a bearish daily candlestick by the end of the US session. So right now, the next support level to watch out for will be at 98.03. A breakdown below 98.03 was potentially seek lower support level coming in, which is heading towards the lower part of this complex sideways range configuration that has been in play since the low of 1st of July, with the next support after 98.03 will be at 97.30, followed by the all-important medium-term range support level that has been in play since 1st of July this year at 96.55. So all in all, potentially we could still see further weakness on the US dollar index. That means, i.e., on the average, dollar continues to remain soft as long as 98.66 and 99.25 resistance level holds for the US dollar index. And 99.25 is rather important over here. Let me highlight it in darker gray because it's the intersection point between the 50-day moving average that has been taken down the downside, and as well as the 200-day and the 20-day moving average, all conferencing at the same resistance level at 99.25. Right, so that's for the US dollar story right now. And another news flow I'll share with you guys over here is that, oil prices was weak in the last 2 sessions, but however, in today's Asia session, oil prices managed to rally slightly over here, added by the fact that there's this International Energy Agency monthly report, we call it the IEA report, that represents major oil consuming nation. They kind of reduce the amount of oil surplus going forward in the end of this year and 2026. So they forecast a smaller surplus over here. All right. So basically, they projected oil supply growth to be 3 million barrels a day this year and 2.4 million barrels per day next year into 2026. So that is a slightly lower than the previous forecasted amount of 3.1 billion barrels per day for this year and 2.5 million barrels per day in 2026. All right, just a slight reduction. So with this slight reduction in the surplus that are being forecasted for next year, that causes oil prices to bounce. And very interesting data I'll share with you guys where it bounces off right exactly at our support level that we highlighted yesterday, where we have a bearish bias, still stating that it's still being trapped in a sideways range. It hit the lower bottom of the range and bounce off. So later I'll share with you guys what are the next trend bias to watch out for today on the WTI crude oil price, right over here. And also bear in mind over here is that let's take a quick look at what happened in the Asia session today in terms of the Asia Pacific stock indices performance. All right, so what you could see over here is that the Nikkei 225 is up by 0.92% as we are speaking right now. Then what's interesting over here is that the Hang Seng Index, which has been weak in the last 2 to 3 sessions ago due to that weakness in the China property market, fears over here over the potential default payment, bond repayment of one of the Chinese major property developer, which is Vanke. But this news has been already put on the back end of the market participants, and market participants now choose to be more focusing on what's ahead next year. So what's interesting over here is the Hang Seng Index managed to close up higher today as we are speaking. So right now it's Singapore time 11:17 a.m. So the China stock market has really been kickstarted, and Hang Seng really open as we are speaking right now. So the Hang Seng Index is up by 1.37%. The higher beta Hang Seng Tech Index, which comprises more of the China big tech stocks listed in Hong Kong, up by 1.3% as well. And if you look at the mainland China A shares, which is the CSI 300 index, is up by 0.3%. So what causes this ongoing positive, we call it performance, intraday performance on the Hang Seng Index, and as well as the China A shares benchmark index, which is the CSI 300, is due to this news flow that came in at the end of the Hong Kong session yesterday, after the close of the Hong Kong session yesterday, where China policymakers in their annual, give me a minute on, let me highlight it over here, put it bigger. So in their annual Central Economic Work Conference, so this Central Economic Work Conference is being participated by key leadership within the China, we call it policy maker committee, top policy maker committee, inclusive of Chinese presidency. All right, so it's a very important meeting. So at the end of this meeting, it's a closed door meeting over here, and they only release a kind of a statement of what is being discussed in the very broad terms and relay it to the various media outlets over here. So based on this briefing that was being out at the end of this closed door Central Economic Work Conference. So the leadership will be much more flexible and efficiently use interest rate and reserve requirement cuts to ensure sufficient liquidity and maintain a necessary level of budget deficit and government spending into 2026. So what it means that over here is that the words about flexibility and efficiently. So it means going forward into 2026, the top policy makers in China potentially signal small stimulus coming into 2026. All right, and this stimulus measures is much more of a modest stimulus measure, but don't forget the word called flexibility. So by using the word flexibility over here, if economic situation deteriorated more than expected, there could be much more ramming up of this stimulus measure, ranging from interest rate, that means monetary policy, and as well as government spending, which is the fiscal side of the story, of the physical side of the spectrum. So all in all, there could be ongoing stimulus measures, both from a monetary policy perspective and a fiscal policy perspective going forward in China in 2026. So that actually explained to us the current positive intraday rally that is taking shape on the Hang Seng Index and as well as the China CSI 300 Index, which is the benchmark A shares over here. Okay, so that sum up the first segment of the daily lows. So let me now move on to the second segment of the daily lows, which I will cover the intraday technical outlook on all the broad-based cross asset classes that we cover on a frequent basis, starting with the FX market. So before that, let me expand my screen so that you guys can have a better view of the charts. Right, so the screen is good. So let me start with the FX market over here. Okay, so let me start with the euro dollar first. All right, so the euro dollar, okay, just to make sure that the screen is up. Okay, good. Okay, so the screen should be fine. Yeah. All right, so the euro dollar squeeze up as expected, hit our resistance level at 117.60 before doing a minor pullback during the second half of the US session over here. So what we could see right now is that the hourly RSI also hit a extreme overbought level. All right, so this is the most overbought level in the last 3 months or so. But however, being very overly extreme overbought, it doesn't mean that the price will collapse by looking at it, because from here we managed to see a healthy overbought situation. What I mean by healthy, that means the RSI managed to shape a higher high in line with the higher high that's being seen on the raw price action on the euro dollar, indicating there is no bearish divergence on the hourly RSI. Yes, there's a exit after hitting a overbought level that is the most in the last 3 months. There's an exit from the overbought as we are speaking right now at 11:22 a.m. Singapore time. So what it means that this exit from the overbought is more likely will lead to a minor pullback sequence rather than the start of a much more multi-day corrective decline sequence on the euro dollar. All right, given the fact that there's no bearish divergence on the hourly RSI. So yes, are we still maintaining that bullish bias despite hitting our first resistance that we mentioned yesterday at 117.60, but more of a form of a minor pullback first. So after this minor pullback has taken shape, potentially the euro dollar should potentially resume its bullish impulsive upmove sequence again. So minor pullback, key tighten short-term pivotal to watch for today will be at 117 figure level. So I will tighten my short-term pivotal support today to 117 figure level to maintain my bullish bias view on the euro dollar after this minor pullback has ended. Next resistance level will be at 117.90, followed by 118.20. So 117.90 is a Fibo extension of this ongoing bullish impulsive upmove sequence taken from the low of 21st of November at 1.236 Fibo extension, followed by 1.382 Fibo extension. And if you were to go down to the graphical resistance level, you saw the minor congestion area of 24th of September for the 117.90 and the 118.20, also confluence with the minor swing high of 23rd of September over here, followed by the 24th of September this year. Only a bearish breakdown below 117 figure level will invalidate today's bullish bias on the euro dollar to see a deeper corrective pullback towards the next intermediate support zone at 116.75/116.55, which is also confluencing with the minor ascending channel support over here that I drawn from the low of 21st of November. So that's for the euro dollar. Only a breakdown below 116.55 will trigger off a much more deeper corrective pullback to retest the next key near-term support at 116.15 that confluence with the intersection between the 50-day and the 20-day moving averages. So that's for the euro dollar. Next up very quickly will be the sterling dollar over here. So the sterling dollar also squeezed up as expected, almost hit our first resistance level at 134, almost hit the second resistance level, not the first resistance level, at 134.50. The first resistance level has been surpassed at around the 134.10 level, which I highlighted yesterday. And right now we are doing a pullback after the second half of the US session. So with that, I will have a tightened short-term pivotal support level for today, tighten it to the former minor swing high of 4th of December and 9th of December that managed to see a minor bullish reversal yesterday at the 5 p.m. mark Singapore time, right? After shaping that pin bar over here, that hourly bullish hammer candlestick, that minor bullish reversal. So using this key pullback level that created this minor bullish reversal pin bar on the 11th of December at 5 p.m. Singapore time yesterday, or at the 5 p.m. hour candle yesterday during the Singapore time. So 133.70, 133.50, that will be my short-term pivotal support zone to maintain my bullish bias on the sterling dollar. After 134.50, the next resistance level to watch out for will be at 134.90, which is also the upper limit of this ongoing minor ascending channel that I drew from the low of 21st of November at 134.90, also confluence with the 1.382 Fibonacci extension on this ongoing bullish impulsive. Okay, very closely to the 1.382 Fibonacci extension of this ongoing bullish impulsive sequence from the low of 20th of November at 1.3490, also confluence with the minor swing high area of 6th of October and 7th of October graphically. Only a bearish breakdown below 1.3350 that would invalidate today's bullish bias view to see a deeper corrective pullback to test close to the 200-day moving average again, also confluencing with the lower limit of this minor ascending channel drawn from the low of 21st of November at 1.3325. Only a breakdown below 1.3325 will trigger off a much more pronounced corrective decline sequence to expose the next support level at 1.3270. So 1.3270 also confluence with the 50-day moving average. All right, so that's for the sterling dollar. Okay. Let us now focus our attention to the Asia Pacific currency, which is the Aussie dollar. So the Aussie dollar yesterday managed to shape a rally over here during the I would say that during the ex-post FOMC. Then thereafter it came down during yesterday's early Asia session, but managed to shape a bullish reversal right exactly at our Titan pivotal support level at 66.30. So for sure, 66.30 is indeed a level to maintain this ongoing bullish biasness, which I highlighted yesterday. Then thereafter shipping a intraday high of 66.75 during the US session before it just traded in a very tight sideways range. So two key levels to watch for to maintain that bullish bias. The first intermediate support level will be at 66.50, followed by 66.30. So for sure, 66.30 will still be my short-term pivotal support level, remains the same because it can't clear above our first resistance at 66.90 yet for now. So maintaining our bullish bias using the same pivotal support level at 66.30, which is my short-term pivotal support level that I have for yesterday, above 66.90, then I would tighten my pivotal support level to 66.50 for today. So for now, given that it hasn't broke out above 66.90, I was still using 66.30 as my short-term pivotal support. Above 66.90, potentially seek out the next intermediate resistance level at 67.20 over here. So 67.20 is also the 1.236 Fibonacci extension of this ongoing bullish impulsive upmove sequence that has been in place since 21st of November, and also coming very close to the upper, also towards the upper limit of this moving ascending channel resistance level that I drawn from the low of 21st of November. And 67.20, if you go back in time over here, also graphically is also the former minor swing high, the minor swing high of 18th of October last year and 18th of October and 21st of October last year, 2027. Okay, going back. So if we start to see a bearish breakdown below 66.30, then that would invalidate today's bullish bias on the Aussie dollar to seek out a deeper corrective pullback sequence unfolding towards the next two support level at 66.05, 65.80 next. So 65.80 also confluence with the closely to the minor ascending channel support drawn from the low of 21st of November. So that's for the Aussie dollar. Next up will be the dollar yen. So the dollar yen pushed down as expected, right exactly at our 20-day moving average over here. The 20-day moving average, it pushed down as expected before shaping back a bounce right over here. Okay, so this bounce so far didn't comes with a bullish divergence on the hourly RSI. All right, so if you look at the hourly RSI, it didn't shape a bullish divergence. Price action shaped a lower low. The RSI also shaped a overlow. It's just only a exit out from the overbought level. Okay, that potentially coincide with the bounce that's being seen during the US session. All right, over here. So with no bullish divergence on the hourly RSI, I will still maintain that bearish bias on the dollar yen. Pardon me. I will still maintain that bearish bias on the dollar yen. but I will have a slightly adjusted downward pivotal resistance level over here for a better risk management perspective. So I put it down from the negative reaction on 11th of December at the 3 p.m. at the 2 p.m. hour bar, 2 p.m. hourly candlestick that got it rejected from the US, get it being rejected from the 20-day moving average yesterday. All right, that was Thursday, 2 p.m. hour candlestick, Singapore time, 11th of December. So this will be my Titan pivotal resistance level over here. So let me adjust it downwards. So that will be 56.10. Okay, so this will be a normal resistance level, or the next resistance level to watch. Okay, let me tidy it up. All right. 15610, and this 15610, if you do the Fibo retracement of this ongoing slide after being rejected at this red color box here, why it's important? So this rejection of this red color box occurred the second time after testing this dotted gray line. Previous rejection was earlier on the 2nd of December. The rejection was on 10th of December, 4 a.m. Singapore time over here. Then if you look at this dotted red line, is in fact the former medium-term ascending trend line support that was broken down on the 1st of December. So previously it was a former ascending trend line support, now turns into a key pullback resistance level. And this trend line support was drawn previously from the low of 29th of October over here. Right, at this point. Okay, so now let me share with you this interesting 14610 level. So in terms of Fibo retracement, taking into account of this ongoing weakness from the bearish rejection of the dotted gray line here, it also coincide very closely to the golden ratio of 61.8%. All right, at 15610, making it a very important inflection level to maintain this ongoing bearish biasness on the dollar yen. So using a Titan downward short-term pivotal resistance for the dollar yen at 15610, maintain that bearish bias. First support level to watch will be close to yesterday's intraday low at 154.95, which will confluence with the minor swing low of 8th of December at 1490. So a breakdown below 1490, potentially seek out the next intermediate support level to come in at 154.40 next, which is the minor swing low of 5th of December. That's being also confluencing with the minor swing low of 17th of November previously. Only a bullish breakout above 15610 that would invalidate today's intraday bearish bias to see a squeeze up to retest 15660 above 15660. Most importantly, retest the negative bearish reaction move at 15715 next over here. All right, so that's for the dollar yen, still maintaining that bearish bias with a tightened short-term pivotal resistance at 15610 for today. Okay, so onward next now will be the major stock indices very quickly, starting with the Asia Pacific region with the Hong Kong 33 that is representing the Hang Seng Index over here. So for the Hong Kong 33, yesterday we do have a neutrality stance. So it burst up above the neutrality limit for today, and which is above 25,830, and also now attempting to clear above the 20-day moving average that has been acting as a resistance since 2nd of December. All right, so hourly price action on the hourly RSI also continues to be rather constructive, shaping a higher low over here, indicating that there is still some form of bullish momentum coming into play for the Hong Kong 33. And yes, it hit the overbought level, but upon hitting the overbought level, there is no sign of a bearish divergence. All right, continue to shape higher high in line with the price action on the raw price action of the Hong Kong 33 that is representing the Hang Seng Index over here. So with that, my first support level to look out for any form of any pullback, given that the RSI now has hit the overbought level, will be this level here. Okay, this former minor swing high that saw a bearish reversal candlestick before the price action dipped down during yesterday's Asia session, and thereafter it managed to reverse off from here. And this reversal point here will be my short-term pivotal support level. okay, at 25,455. Okay, so this will be my first support level to watch at 25,700 level for any chance of a minor pullback, given that the RSI hit the overbought level at this point in time as we are speaking, 11:36 a.m. Singapore time. So as long as this minor pullback did surpass this bullish reversal point that is being seen yesterday at 11th of December at the 1 p.m. hour candlestick Singapore time, that will be at 25,455. So using 25,445 as my short-term pivotal support level on the Hong Kong 33, I will flip back to a bullish bias. Next resistance level to watch will be at 24,140. We also confluence with the 50-day moving average above 26,140. Potentially seek out the next intermediate resistance level at 26,275. 26,003, which is the minor congestion area here of 17th of November and 18th of November. And also, if you look at it from a chart pattern perspective, these two price action that is being seen on 21st of November and most recently yesterday, it could start to form a potential double bottom formation. Right, a minor double bottom formation with the neckline resistance at the 26,275. 26,310 level, right? So that's for the Hong Kong 33. Only a bearish breakdown below 25,455. Potentially, we'll see a choppy corrective decline sequence, minor decline sequence unfolding again to retest this all-important double bottom low, the double bottom low at 25,150, which is the minor swing low area of 21st of November. All right, next up will be the Nikkei 225. Or the Japan 225 representing the Nikkei 225. So no change on the Nikkei Japan 225. It has been stuck within a series of higher low over here. This is a higher low and it still continues to trade within a medium-term ascending channel. This green line here that is in place since 7th of April 2025 low, and also still trading above the 20-day moving average and as well as the 50-day moving average. So this hourly chart. So bear in mind very quickly that for some of you guys who may not know, for TradingView, we are able to plot a daily time frame moving average, overlay it with a shorter time frame chart, which I did right now on the hourly chart. So we are able to do kind of a multi-time frame analysis on a single chart. All right. So whatever moving average that I show you guys is not the 20 hourly period moving average, is a 20-day moving average. So indicate to us that the higher time frame chart on the Japan 225 still remains constructively in the uptrend. All right, but it's only on the hourly time frame chart since the high of 4th of December. It's been stuck in this minor sideways range. And in today's Asia session, it hit at the start of the Asia session at 8 a.m. Singapore time today. It hit the upper limit of this minor sideways range before shaping that pullback again. So given that it can't break above this 50,985 that has been tested one time, two time, three time, and the fourth time today, it's rather important resistance level to watch. Okay, so I don't want to be so aggressive and tighten my short-term pivotal support level to the first support level that I have today, 50,530, where currently the price action managed to be holding on at this level. I don't want to tighten it to this level unless we have a clear hourly bullish breakout and the hourly close above 50,095, then I will tighten it to 50,530. So for now, pivotal support still remains the same, which is at 50,150/49,960. It's a tight zone with the lower limit of the zone at 49,960, confluencing with the 20-day moving average and as well as the bullish hammer reversal candlestick that has been printed on 11th of December at the 11 a.m. Singapore time hour. That will be the lower limit of this pivotal support level. So remains the bullish bias for the Japan 225, but price action got to clearly break out above 50,985 to increase the chance of this ongoing impulsive bullish upmove sequence to seek higher high for the next intermediate resistance to come in at 51,530 in the first step, which is the minor swing high area of 5th of November, 11th of November, and 13th of November. Only a bearish breakdown below 49,960 that would negate today's bullish bias move to see a deeper corrective pullback, exposing the next near-term support level at 49,400/49,085. And 49,400 also confluence with the 50-day moving average and as well as the lower limit of this minor ascending channel drawn from the low of 7th of April 2025. Right, so that's for the Japan 225. Very quickly, next up will be the Germany 30 that representing the German DAX. So German 30 rally as expected hit our resistance level that we portrayed yesterday, 24,395. All right. So given that the RSI is at the overbought level, all right, and it's now showing it's really start to exit from the overbought level as we're speaking right now, there could be a minor pullback taking shape. So minor pullback support level to watch will be a zone 24,190, pardon me, 24,125. All right, so this also confluence with the former swing high that was taken out yesterday at 11. This former swing high was on the 11th of December, 3 a.m. Singapore time up, and also confluence with the this 24,125, the lower limit of the support zone, also confluence with the minor ascending channel support that managed to cap the previous bullish reversal low on 11th of December and 1st of December, now acting as a dynamic support level based on the upward sloping of this minor ascending channel drawn from the low of 20th of November. So using a higher adjusted pivotal support zone for today, 24,190 / 24,125, as long as this pullback didn't surpass below 24,125, short-term pivotal support level, an adjusted one, we will still maintain that bullish bias outlook on the Germany 30. Next resistance level to watch will be a Fibo extension confluencing with a Fibo extension zone at 24,560 / 24,620. And if we go back in here, it also confluence with the minor congestion area of 3rd of December and 10th of October. Right, only a bearish breakdown below 24,125 that would invalidate today's bullish bias view on the Germany 30 to see a potential corrective decline slide retesting 24,000, which is the minor swing low area of 11th of December and 8th of December. Only a breakdown below 24,000 will trigger off a deeper minor corrective pullback, exposing 23,860 and even 23,670, which confluence with the 20-day moving average as well. Okay, so that's for the Germany 30. Next up will be the major US stock indices, starting with the S&P 500. So the S&P 500 squeezed up as expected, broke above the former all-time intraday high at 48,450 that was printed previously on the 13th of November. So given this is a one-way straight push up, so in today's session, during the US session, it may do a bit of pullback taking shape. So first pullback level to watch out for will be the former all-time high, I think as a pullback support level, intermediate pullback support level, 48,450, but I don't want to tighten it so tight at 48,450 for the pivotal support just in case of any whipsaw. So I'll use much more of a significant level, which is the former minor swing high of 5th of December. It can't break previously, it consolidated, and it tested again during the ex-post US session yesterday before shaping a pullback, and finally it did a bullish breakout in yesterday's start of the US session, making this 48,125 a much more meaningful pivotal support level based on how the price action react to it. And if you do the Fibo retracement of this ongoing minor bullish impulsive upward sequence taken from the low of 10th of December all the way up to today's Asia session intraday high, that also confluence with the 50% Fibo retracement. So with that, that 48,125 making it a much more important support level as compared to 48,450. That's only managed to only touch 1 point, which is the former all-time high. So given that 48,125 confluencing with much more important technical elements, so I'll be using 48,125, a tightened short-term pivotal support level. I adjusted upwards from yesterday 47,900 level to 48,125. So 48,125 will be my tightened short-term pivotal support on the US Wall Street 30, representing the Dow Jones Industrial Average. As long as this minor pullback didn't surpass below 48,125, we will still maintain that bullish bias for the next intermediate resistance to come in after 48,770 will be at 49,250, 49,280, which confluence with a Fibo extension cluster level. All right, only a bearish breakdown below 48,125 that will invalidate today's bullish bias view to see a much more deeper minor corrective pullback sequence unfolding, exposing the next two intermediate support level to watch will be at 47,820, pardon me, 47,560, which is the minor swing low area of 10th of December and the minor congestion area of 3rd of December previously. So that's for the US Wall Street 30. Next up will be the S&P 500. So the S&P 500 also squeezed up and almost retesting the current all-time high at 6,930. So that's our CFD index representing the S&P 500. All right, so 6,930, which is the minus all-time high area of 29th of October and 30th of October. So given that it hasn't hit the overbought level yet, so my first support zone to watch over here will be a zone 6,890/6,870 over here. But given that it can't clear above the current all-time high at 6,930, so clearing above 6,930 with an hourly close thereafter during the European session or at the start of the US session, I could tighten my pivotal support level to 6,870. So for now, my pivotal support level still remains the same, which is the bullish reversal swing low that is being formed on the 11th of December, Singapore time at 11 a.m. hour mark yesterday. So that will be 6,830/6,807. So this will still be my short-term pivotal support zone to maintain my ongoing bullish biasness on the SPX 500 above 6,930. Potentially will see the next intermediate resistance coming in at 7,000/7,005, which is a Fibo extension level, and also a psychological level as well. However, a bearish breakdown below 6,807 that would invalidate today's bullish bias view to see a deeper corrective pullback to retest the 20-day and the 50-day moving average, confluencing at 6,780, 6,760. All right, so that's for the SPX 500. Lastly will be the Nasdaq 100 over here. So the Nasdaq 100 also stubbornly managed to recover right exactly at my pivotal support area at 25,455. So over here, just to make sure that the screen is up, okay, good. So at 25,455, this is indeed a short-term pivotal support area that managed to keep the bulls intact. But so far, the bulls can't break above the first resistance level that we highlighted yesterday at 25,760/25,830, right? It hit 25,830 at the close of the US session yesterday before shaping a minor pullback in today's Asia session. So given that it hasn't broken above 25,830, I'll be still using the same pivotal support area at 25,455. So given maintaining that bullish bias on the Nasdaq 100 above 25,830, potentially seek out the next intermediate resistance level at 26,070, then thereafter followed by the current all-time high at 26,290. So 26,070 is the minor swing high area of 3rd of November. Only a bearish breakdown below 25,455 area will potentially negate this bullish biasness on the Nasdaq 100 to seek out a deeper minor corrective pullback towards the next intermediate support zone at 25,305/25,185, which confluence very closely to the 50-day and the 20-day moving average as well. All right, so that's for the Nasdaq 100. All right, so that sum up all the intraday technical outlook on the major stock indices. Lastly, now let us now proceed to the commodities market, starting with gold XAU/USD. So for gold XAU/USD, gold price finally managed to stage a breakout above the 4,267 level. All right, over here, okay, managed to stage a breakout, and thereafter during the Asia session or during the entire second half of the US session, it traded in a very tight sideways range over here. All right, so given the fact that it traded in a very tight sideways range over here, there could be a chance of a minor pullback taking shape as well. Why? Because the RSI starts to exit from the overbought level as we are speaking right now at 11:49 a.m. Singapore time. All right, at 11:49 a.m. Singapore time, the RSI has already exited from the overbought level, giving risk for a minor pullback to take shape. So minor pullback potentially could come down to the former minor swing high area of 5th of December and as well as 11th of December, I think as a first pullback support level at around this 4,243 level over here, 4,243. So with that, I'll be using a Titan short-term pivotal support for today. Previously, the pivotal support was around the 20-day moving average, which I have for the entire week at 4,150 level. Given that price action has now broken up above the 4,267 level, so potentially my pivotal support level, I will tighten up today to yesterday's bullish reversal low during the European session at 2 p.m. Singapore time at 4,205. So using a Titan short-term pivotal support at 4,205, still maintain that bullish bias on the gold XAU/USD after a potential minor pullback that may take shape to retest close to 4,267. Thereafter, the next resistance level to watch out for will be at 4,340, 4,355, slightly below the 4,380 all-time high area that was printed previously in 20th of October. So 4,340, 4,355 also confluence with the one-time Fibo extension of this ongoing impulsive upmove sequence that has taken shape since the low of 28th of October and also confluence with the minor congestion area of 21st of October. However, only a bearish breakdown below 4,205 that would negate today's bullish bias view to see a deeper corrective pullback taking shape to retest the 20-day moving average, now acting as the next intermediate support level at 4,155 next. Only a breakdown below 4,155 will potentially kickstart a much more deeper multi-day corrective pullback, exposing the next support level at 4,105. So that is actually the 50-day moving average. A breakdown below 4,105 potentially see further weakness towards 4,038 next, which is the minor swing low area of 20th of November and 24th of November over here. So that's for gold XAU/USD. Lastly will be the West Texas crude oil. So the West Texas crude oil yesterday or the entire of this week, we do have a bearish bias. So yesterday it finally hit the lower limit of this minor sideways range configuration that has been in play since the low of 21st of November. And price action shaped a lower low, where you could see over here. Very interestingly, after shaping a lower low, hitting our desired support level, which we have our bearish bias yesterday, the hourly RSI now shape a bullish divergence. All right, bullish divergence, indicating that the downside momentum has started to ease off, potentially allowing the West Texas crude oil to go back up towards the upper limit of this sideways range again. So with this bullish divergence that has taken shape upon hitting our support level, which is the minor range support level, which is also our bearish bias view yesterday, with that, we will flip to a intraday bullish bias, but not the start of a pronounced uptrend or a pronounced bullish reversal, but more of a bounce back towards the upper limit of this minor sideways range that has been in play since the low of 21st of November this year. So pivotal support zone to watch out for 57.54/57.21, which is yesterday's minor swing low. Flip to an intraday bullish bias for it to head up towards the upper limit of this minor sideways range. In first step, two intermediate resistance to watch that out for in the intraday basis for today, 58.70, followed by 59.18, which is the minor swing high of 9th of December, and as well as the 20-day moving average acting as a similar resistance level as well at 59.18. Only a bearish breakdown below 57.21 will invalidate this push-up view towards the upper limit of this minor sideways range and see a minor bearish breakdown from the range to expose the next support level at 56.80. Below 56.80, which is the minor swing low area of 17th October, may seek out further weakness towards 55.80, 55.55. So this level here is going back in time, will be previously the 5th of May 2025 minor swing low, which is also the year close to the year-to-date low as well. All right, so the year-to-date low was at this 55.26 level, which was the ex-post US Liberation Day global tariffs announcement that was on 9th of April. Okay, so back down towards the gold. All right, so right now, let us go to the third segment of the daily dose before I do the lucky draw. Bear in mind very quickly to be shared with you what are the key economic data to watch out for today's session over here. So let me open up the calendar for you guys to see. Okay, so today's calendar very quickly. Okay, so today will be Friday over here. So Friday, the key data to look out for as we head into the European session in a couple of hours time, very quickly, will be at 3 p.m. Singapore time. We have the UK monthly GDP data that will be out for the month of October. So that could potentially influence the sterling dollar and the sterling crosses. So that will be at 3 p.m. Singapore time. And thereafter will be a rather quiet session over here. And at 9 p.m. Singapore time, before the start of the US session, we will now kickstart a slew of US Federal Reserve official public speeches. Fed Paulson will be speaking at 9 p.m. Singapore time. All right. Then after that, we have 9:30 p.m. Fed Hammock and 11:35 p.m. Fed Gooseby will be speaking. All right. So thereafter will be a rather quiet US session over here. And bear in mind, at the start of next week Asia session before our daily dose at 11 a.m. 15th of December, that's next Monday, before the start of daily dose, we have a couple of interesting, important China data that is out. Firstly, 9:30 a.m. the housing price index. So for trading economics, their view, they forecasted a slowdown in the housing price index, which is considered as a very positive news for the market, given the fact that the housing price has been the crux of this deflationary fear of this deflationary spiral in the Chinese economy. So that will be at 9:30 a.m. Singapore time, and thereafter the focus will be at 10 a.m. Singapore time, will be industrial production and retail sales figure coming out from China. That right. So these three data could potentially influence the movement of the Hang Seng indices. Right. So that sum up the segment of the economic data releases for today. What are the important one to look out for, and as well as in early Monday session, which is on the 15th of December. So right now it comes to the exciting part of it, which will be our live lucky draw, which I'll be drawing out 5 lucky winners for our 888 Singapore dollars to be credited to your trading account over here. So before that, let me show myself again, right, so that you guys could see me. All right, and now let me switch the screen off to my lucky draw over here. All right, so hope that you guys could see the screen. All right, so basically how it works over here is that all the qualified, we call it qualified participants to this draw will be assigned a number. So I will pick up a number. So after pick up a number, I will read out the account, the first four letter of your we call it user ID, and from there you will someone from OANDA will get in touch with you, and you also receive an email on your notification of the winning of this $888 within 7 days from today. All right, so now let us get started with the draw. All right, over here, just to make sure that everything is good. All right, so I'll be drawing the first winner right now. Okay, so let's see who will be the lucky winner for our first prize, the first of the 5 prize. All right, over here. I think it's a bit lagging. All right, yes, we have a winner number 2 over here, number 2. All right, number 2. So number 2 will be the user ID name for the first 4 digit will be C51A for alpha, C51A for alpha. A big congratulations to you, and you'll be notified pretty soon. All right, so now let me draw the second winner. Big congratulations. The second winner will be 10. Number 10. All right, number 10. So number 10, very quickly, let me see the user ID for number 10. All right, so number 10, the user name or the user ID, the first we call it 4 characters will be 041C for Canada. 041C for Canada. Very congratulations to you. Now let me draw the third winner. I'm not sure whether the screen is it frozen just a while ago. Yes, we have the third winner is number 11 over here. So let's see who is number 11. All right, so congratulations to user name or user ID 83D for Denmark 5. All right, 83D5. All right, so congratulations to you. So now let me draw the fourth winner. All right, the wheel has stopped to number 1. So congratulations to number 1. So number 1 will be the username or user ID F for France F313. Okay, congratulations to F313. Okay, so let me remove it. All right, so now we comes to the last 5th winner. All right, so who would it be? So let me spin the wheel. Yes, we have a winner. That's number 9. Congratulations to number 9. So number 9 will be username at 3487. Okay, 3487 over here. So 3487, congratulations to you. A big congrats to you, and we will notify you of your an email to regards about you winning the $888 to be credited to your trading account over here. So we have drawn up 5 prizes over here. So for those who didn't manage to win the draw, nevertheless, we will continue to have 2 more draws over here. So going forward, the next draw will be on the 14th of January 2026 Daily Dose session. So with that, a big congratulations to all the 5 winners that I drawn up just a while ago. And a notification, you will receive an email notification within 7 days from today. And I wish you guys a great weekend for all to attend today's Daily Dose and a restful weekend as well. And I should speak with you guys again on the next upcoming Daily Dose on next Monday at 11 a.m. Singapore time. Thank you.